Weekly Alphabet Spotlight Podcast for Week 9, 2026. Opening. This week for Alphabet, the story wasn't just about software, it was about power. The company made massive deals to build out the energy infrastructure for its AI ambitions, securing enough new clean energy to power small cities. At the same time, in a surprising twist, social media rival Meta turned to Google for the specialized chips needed to train its own AI models. With the company spending at a historic pace, are these the moves of an untouchable leader or a high-stakes gamble that has some investors on edge? Introduction. Welcome to TickerWatch News for Alphabet, Week 9, 2026. This week, we're tracking the flurry of developments around Alphabet as it doubles down on the infrastructure needed to power the future of artificial intelligence. Stock Snapshot. It was a mixed week for Alphabet shares. The Google-class stock ended the recent trading session at $311.69, managing to outpace the S&P 500 for the day. However, looking at the bigger picture, the stock has seen a loss of over 9% during the last month, trailing the broader market. This recent dip comes after a strong run, pulling the stock back about 13.5% from its recent all-time high. The broader market context shows a tech sector that is facing some pressure, though Alphabet managed to find some footing as the week closed. The quick takeaway is that while daily performance can be strong, investor nervousness about the company's spending plans seems to be creating headwinds over the medium term. Top news and headlines. The biggest story for Alphabet this week centered on a massive push to secure power for its growing fleet of data centers, driven by the intense energy demands of artificial intelligence. The company announced a partnership with Xcel Energy in Minnesota to develop a new data center complex powered by nearly 2 gigawatts of new wind and solar energy. The project's most notable feature is the world's largest battery system, an iron-air battery from startup Form Energy, capable of providing power for 100 hours. This is a pioneering move for long-duration energy storage. Alphabet is making similar moves across the country, signing a 20-year agreement with AES Corporation to power a new data center in Texas and another deal with Ormat Technologies for geothermal power in Nevada. These deals show the company is proactively building its own energy supply to avoid straining public grids. In a major validation of its custom technology, Alphabet signed a multi-billion-dollar deal to lease its AI-focused tensor processing units, or TPUs, to its competitor Meta Platforms. Meta will use the specialized chips to train its own AI models, representing a significant win for Google's cloud division and its strategy of developing in-house silicon as an alternative to hardware from chipmaker NVIDIA. Finally, Alphabet continued to expand its ecosystem through several key partnerships and a regulatory win. The company is collaborating with Amdocs to bring generative AI to telecom contact centers and partnering with Cliveo to integrate AI into customer experiences. After a nearly 20-year effort, Google also won conditional approval from South Korea to export high-precision map data, a move that could significantly improve Google Maps functionality in the country. Market reaction and investor sentiment. Investor sentiment around Alphabet appears divided. On one hand, the company's aggressive moves in AI and cloud are drawing praise. Analysts' consensus remains a strong buy on the stock. Partnerships with companies like Meta and TerraWolf, which is using Google's credit to back a leasing deal, signal strong industry confidence. On the other hand, there's growing anxiety about the sheer scale of Alphabet's spending. Famed investor Michael Burry publicly questioned the sustainability of the massive capital expenditures, which are projected to be between $175 and $185 billion for 2026, nearly double the previous year's levels. This concern is shared by a segment of the market, with some analysts viewing the spending as a high-stakes bet that could pressure free cash flow if AI monetization doesn't arrive quickly. This debate is reflected in the stock's recent volatility as the market weighs the long-term promise of AI dominance against the immense near-term cost. Technical and fundamental check-in. From a technical perspective, Alphabet stock is cooling off after a powerful rally. The recent pullback has brought the Relative Strength Index, or RSI, back to a more neutral level around 40, down from the overbought territory it occupied in early February. This suggests that while buying momentum has faded, the stock isn't showing signs of extreme pessimism. The price has eased back from the upper end of its Bollinger Bands, signaling a period of consolidation may be underway. Fundamentally, Alphabet's growth story remains robust. In 2025, Google's advertising revenues grew over 11%, while Google Cloud revenue surged by nearly 36% to over $58 billion. That cloud growth is supported by a massive backlog of contracts, now totaling $240 billion. From a valuation standpoint, the stock trades at a forward price-to-earnings ratio of about 26.5. While this is a premium compared to its industry average, it's a valuation that reflects the company's powerful market position and the high growth expectations for its AI and cloud segments. This week's news reinforces that the company is investing heavily to ensure that growth continues. What to watch next week? Investors will be eagerly awaiting the company's next earnings disclosure for more clarity on its performance. The forecast is for an earnings per share of $2.76 on revenue nearly $92 billion. This report will be critical for assessing if the massive investments in AI are translating into the expected revenue growth. Key price levels to monitor include the recent support around $296, with resistance forming near the $330 level. Looking at potential scenarios, the bull case is that these strategic power and chip deals solidify Google's infrastructure as a competitive moat, accelerating its cloud and AI businesses. The bear case is that investor anxiety over the historic capital spending continues to weigh on the stock, particularly if AI profits seem slow to materialize. The base case likely involves the stock trading in a range as the market waits for the upcoming earnings to provide the next major catalyst. Outro. Thank you for tuning in to TickerWatch. The information in this podcast is for educational purposes only and is not financial advice. We encourage you to subscribe, leave a review, and share this episode. Join us next week for more news on the companies driving the market.